July's CPI delivered exactly what markets wanted, with inflation cooling to 2.7% versus forecasts. And within minutes, traders were pricing higher odds of September Fed rate cuts, with pre-markets surging and yields dropping. But the market's response to Fed rate cut expectations often has more to do with existing cycle positioning than the actual data itself. As markets move because cycle timing creates conditions for sustained advances, regardless of what Powell says. Our cycle charts showed this developing long before July's CPI was released, with the intermediate cycle turning up with room to run, and the long-term cycle remaining in an upswing that historically keeps pressure to the upside. This cycle positioning was established before any inflation data, creating structural conditions for positive market response to neutral to positive economic data, where the specific number mattered less than the cycle framework already in place. Fed rate cut expectations create more problems than solutions, as they require constant interpretation of evolving data and communication that's deliberately vague and subject to revision, while markets often move in anticipation of policy changes rather than in response to them. By the time the Fed actually cuts rates, much of the positive reaction has already occurred during expectation-building phases, with traders who wait for confirmation often buying near cycle peaks, rather than during accumulation phases when the real opportunities develop. The August 22nd projection for intermediate cycle peak provides crucial context, as any September FOMC meeting occurs during a different cycle phase than the current advance, with cycle analysis providing objective exit criteria through crossover levels that eliminate guesswork about when to take profits around Fed meetings rather than hoping Fed policy supports your position. If you're ready to trade with more discipline, clarity, and confidence, predict the market days or weeks in advance. Join the Market Turning Points community and visit stockforecasttoday.com.